technical difficulties to join the platform, unfortunately. So I would suggest that we start, and hopefully he will be able to join soon, and then he will be able to make his statement and join the panel discussion. So good afternoon, and welcome to the afternoon session of the Global Solar Market Outlook Launch Conference, organized by Intersolar as part of the Smarter E and SolarPower Europe, and supported by the Global Solar Council. My name is Máté Heisz, and I am Head of International Cooperation at SolarPower Europe, and it is my pleasure to be your host for the following session. This morning, we heard the numbers and the findings of SolarPower Europe's latest Global Solar Market Outlook for the period 2020 to 2024. We learned that 2019 was the best year in history for solar, with total additions of 117 gigawatt of solar globally. We also learned that 2020, which everyone thought would be another record-breaking year, is set to be the first year in history that the worldwide solar market will not expand but shrink due to a number of reasons triggered by COVID-19. However, all of us, including SolarPower Europe, but also other market analysts, have high hopes for a rebound, for a fast rebound in 2021 and 2022. Now, obviously, the question is, as Michael put it in his presentation this morning, how fast this rebound can be. So in this session, this afternoon, we will discuss how COVID-19 has impacted solar businesses around the world and how it continues to impact solar businesses and our sector in general. And we will contemplate the possibilities of a quick rebound. And we will also try to look for answers for what is needed for a quick rebound. We have invited high-level experts from leading institutions around the world to explore these topics. So it is my pleasure to introduce and to welcome our speakers, who will start with a round of short input presentations, which will be followed by a panel discussion. So let me introduce the speakers. We will start with Markus Hoehner from EUPD Research. He is the CEO and founder of this leading energy market analytics agency, and he will present to us EUPD's new COVID-19 Solar and Storage Business Climate Index and how we can gather reliable information on market developments during the pandemic. Then we will be welcoming Gianni Chianetta, the chairman of the Global Solar Council. Welcome, Gianni. It is great to have you here, who will present to us the results of the Global Solar Council's sector survey on the impacts of COVID-19 on global solar markets. And then Gianni will be followed by Michael Renner. Hopefully he will be able to join our sessions, and technical difficulties will be resolved by then. Michael Renner is Program Officer at the International Renewable Energy Agency. He will be replacing Rabia Ferruki. Director Ferruki had unfortunately an unforeseen engagement this morning in her calendar, so she wasn't able to join us today. However, Michael will replace her to speak about IRENA's latest global renewables outlook and what is needed for the transformation of the energy sector by 2030 and by 2050. And last but not least, it is our pleasure to welcome Alessandro Boschi, head of the Renewable Energy Division at the European Investment Bank. And Alessandro will speak about the EIB's perspective on the impacts of COVID-19 on solar projects, and also what support the EIB is providing to the sector. So to all speakers, thank you very much for accepting our invitation. So before starting with the first input presentation of Markus, I would just like to encourage the participants to ask questions in the chat on the right hand side, and please also note that if you would like to enlarge the presentation, you just have to double click on it. You can also double click on individual presenters' videos if you would like to enlarge them. So with this much as an introduction on my side. It is great to have all the speakers here as well as the participants. And then now I would like to give the word to Markus. Markus, please.
Thank you very much, Máté. Welcome to everybody from my side. Happy to attend this exciting panel, and I'm looking forward to the discussions. Yeah, we have prepared a deck with some slides out of our business climate index surveys. Maybe a little background information. EUPD research is analyzing 70 plus LCOI ready markets globally by 160, 70 parameters to understand precisely for several stakeholder groups like the financial sector and manufacturers, the dynamics of each market segment by segment and the forecast as well. Within our group, we are hosting the joint forces for solar platform as well, which is the largest network on PV energy globally. And we have several type of expert boards consisting of experts out of different stakeholder groups like inverter manufacturers, module manufacturers, BOS, the financial sector, the EPC sector, more than 16 stakeholder groups. And we have different board members for each country market out of these stakeholder groups. And these people are giving us the opportunity to ask them, because they are deeply involved into the markets, about the current business situation as well as the business outlook. We are conducting these surveys bi-weekly, so we had the opportunity to measure very precisely through the Solar and Storage Business Climate Index the Corona impact. And this is what the presentation is basically consisting of. So maybe we can jump to the next slide. Next one, please. Yeah, EUPD research is tracking energy markets, especially renewable energy markets globally, as mentioned, in 70 plus country markets since 20 years. And additionally, we have a few other companies in the group to help industry players to access these markets, to communicate to the right stakeholders, as well as to sell the product and forecast the markets. The next slide shows a little overview about our customer groups, and then we can jump on the next slide immediately on the impact of the COVID, what we are monitoring, the experienced impact of COVID-19 on market demand. We're on the market demand side right now. In April was in most of the cases weaker than anticipated when the lockdowns started. So I'm happy to share this slide, and maybe just for your backgrounds, out of all of these markets, there are 60 plus slides to describe what is really going on in the market. But we were trying a little bit to aggregate what was the expected impact, the blue dots, and the experienced impact. And you see basically, yes, in Oceania and Middle East, the experienced impact was a little bit weaker. But on the other side, you see Africa, Asia, Europe, North America, and South America, where the expected impact was a little bit beyond the experienced impact. On the next slide, and this was the demand side in April. So when we look on the PV pricings, The effect on pricings on PV systems globally in Q2 became more severe. So stakeholders were confronted with higher prices globally, besides of North America. So here again, the blue dot shows the earlier assessment and the green the later assessment, and you see that there is a certain negative development and impact on pricing, which is pretty clear. I think we will discuss that during the panel discussion. First of all, January, February, the impact on manufacturers, it was difficult. Also logistics-wise to get the products to the havens due to several quarantine areas, and to ship that to the global markets. But nevertheless, the blue and green dots are close to each other. And the next slides, we want to shift our focus now from the global regions, because in 8 minutes it is also difficult to comment on each market. But nevertheless, let's shift a little bit our focus to the European markets after having suffered a significant impact following the introduction of lockdown measures. The European core markets are definitely starting to recover. Maybe we just look at the German market, for example. We see Italy, Spain, France, and Germany here, and I'm sure we'll have a chat on the impact on the Italian market as well with Gianni. But let's look on the German market. You see there was a quite weak, slight impact expected, and when we look in the different inquiries, March, early April, late April, May, and as well as into the expectation of June, you see the curve is quite flat. So yes, there is a weak impact, but in the German market, for example, installations were going on, supply chain was stable. So it was just a weak impact, and the expectations from the stakeholders out of the German market are even lowering their expectations. So yeah, there is definitely a recovery. There are other effects in the German market, like the 52 gig cap, and hopefully the politicians are now under much pressure. This week is decisive for that, to get rid of that. But when we look on the next slide and compare Q1 2019 with Q1 2020, we see impacts. Negative impact in the large commercial segment as well as in the medium commercial segment, or just half of the size. So institutional investors, commercial investors facing this cap were hesitant to continue with the installations and plannings for the PV systems. But when we look at the large scale segment, there was a year-to-year growth 85%, as well as in the small commercial 40% plus, and especially the residential system. And in Germany, around 80-85% of all PV installations come along with a storage device, ES. There was a growth of 78%, so including some pull forward effects in Germany due to the cap. The next slide is about storage. The storage installations are expected to be only marginally affected by the COVID-19 in the German market in 2020. You really see a flat curve moving up a little bit in April, but going down in May. A lot of the top 5 manufacturers like Sonnen, like E3DC, like Senec, like BYD and so on, had some of the best months in their corporate histories. The next slide is again on prices. COVID-19 had an average impact on prices, slightly higher pricing in Germany in Q2, but nevertheless, it is expected to taper down. So small increase going down in June and July again. Next slide shows one impression out of our pricing monitoring we are conducting quarterly since more than 10 years in the PV markets. And here you see that the price of PV system was increasing Q1 to Q2 by about 4% between the 3 and 10 kilowatt peak installations. And 10 to 100 kilowatt peak, the curve at the bottom shows a very slight increase in pricings again. But I'm sure within Q3 and Q4, we are getting back to the learning experience curves. The next slide is already the conclusion slide. So COVID-19, in our perception, impacted the global PV markets differently, from very slight to severe impacts, very different across the regions and the country markets especially, but generally the impact of COVID-19 on the PV market was weak expected. After an initial shock determined by lockdown measures, especially the European core markets are starting to recover. We see very positive trends, and the residential PV segment and the storage market kept growing at a sustained pace in Germany during Q1, and the indications out of Q2 show the same. And last but not least, COVID-19 has had a temporary effect on pricing. However, this is expected to stabilize in the very near future. Next slide. I think that's it. Yeah, thank you.
Thank you very much, Markus. And indeed, this is very interesting. Your insights are very interesting. Interesting to hear, for example, that the expected impact was much higher than the experienced impact. And this is something that we should indeed explore further in the panel discussion, also for the future, perhaps, how it will continue and what we expect for the future and what has to be done in order to accelerate the rebound. So let's move on to our next speaker, Gianni Chianetta, Chairman of the Global Solar Council. Welcome, Gianni. It is great to have you here. Gianni will speak to us about the Global Solar Council's sector survey and the results of the survey, because the GSC also conducted such a survey, which offers some interesting insights on what companies experienced and what they expect from governments. Gianni, over to you.
Thank you, Máté, for the introduction. Say hi to all the participants and, of course, colleague speakers. And it's been a great pleasure, of course, to cooperate in the Outlook. Yes, you can start showing the presentation. I'd like to recap next, please. Anyway, Global Solar Council, many of you know now, but is an organization built in 2015 in the context of COP21 in Paris, and Global Solar Council is representing all the national, regional solar PV associations plus global corporates with a vision of leading solution to the world's energy needs. And of course, we want to promote solar energy worldwide, being a reference point for all the global key institutions, and of course, taking care about market development, partnerships, and educations. We are cooperating very well with IRENA, with REN21, with IDA, which is the Global Association for the Water Industry, with ISA. Next slide, please. Of course, our activities focus on on policy recommendation for, of course, intergovernmental organizations, open new markets, supporting the existing markets, and of course expanding local capacity and promoting standard best practices globally. And we strongly believe that we can achieve even much more than 10 million solar jobs by 2030. And despite COVID, and we'll say why. And of course, that means, of course, trillions of dollars in the long term of investments. Next slide, please. So as Máté has been saying before, we did conduct a global survey to understand the situation of the PV industry globally during the COVID-19 pandemic. Let's say we did conduct this study in last April, and we got answer from 62 countries, around 500, of course, replies from all the value chain. Please, next, please. And next slide, please. And next slide. Hello? Thank you. No, the previous one. So the previous one. Thank you. The impact on orders, of course, this was done in April, so was the core of the lockdown. So there was 71% said that have had a very strong impact on orders, even above and 50%, and many also 1 to 10 of 10 above 90%. Next slide, please. And we had experience, of course, an impact on supplies, on goods and services, also around 75%. And the expectation for the coming months at that time was also that the impact would have been so strong. But I would say, and as Markus was saying before, anyway, after the lockdown, probably the same with the same questionnaire, the expectation would be better. Next slide, please. So this is a very interesting slide where we did ask what could have should be the government action or mechanism. So you can read here a lot of key, of course, suggestion: tax credit for companies, tax relief for solar PV installations, non-refundable loans or AID, dedicated state financing. But it's very interesting what is under the 20%. Anyway, very important indication regarding the bureaucracy. Digitalization now, much more than before, could be really a way of simplify and the procedures. Accelerate the procedure could be for the authorization of projects that are under authorization now, could be the best, one of the best way really to accelerate the restart of the recovery of the solar business. And of course, you see stimulus measures to boost demand for solar green investment post-COVID, and preferential treatment for solar in the power market in general. Next slide, please. So I just kept 3 main slides of the whole study that we did. Of course, in the global market outlook, you will see more. But I'd like to focus on what we have learned from the pandemic. Of course, we have big CO2 reductions. Well, this trend should be the trend that we need in order to pursue the SDGs goals. And what the governments are doing and will be doing the next months. really will determine how we will reach the goals. So these are the most delicate moment where the companies and the industry associations need to work together in order to address the recovery plans of governments. Next slide, please. And I think that one wording that we did learn during the pandemic is really work together, join our effort, and the Global Solar Council, as part of Arena Coalition for Actions, did contribute to the calls on government that has been published, where over 100 bodies of the Coalition for Action did sign joined these calls, and for sure prioritize renewable energy and commit to phasing out support for fossil fuels. Unfortunately, a lot of incentives to fossil fuels are still in place. Provide the public financial support to safeguard the industry and mobilize private investment in renewables. Of course, enhance the role of renewables in the industrial policies. And of course, try to manage the just transition. So manage properly the transition, helping workers to make the shift to renewables jobs. And last but not least, of course, strengthening international cooperation, and in order to accelerate the deployment of renewables in line with the goals, SDGs. Please, we can go to the next slide. And this is a very interesting outcome of a very authoritative institution that say that every $1 million that is invested in the clean energy infrastructure generate 7 jobs in renewables and 7.7 in energy efficiency, while only 2.65 in fossil fuels. Is not the only institution is stating this wording. There are a lot of economic study about this. So I think government should really look at these messages in order to make the correct plan and to create new jobs and for the just transition. Please, next slide. And of course, governments are already putting solar in the heart of the recovery plans. The example of Malaysia, with a tender of 1 gigawatt utility scale project, the Swiss government with programs of 46 million supporting solar systems, and of course the European Commission with a, of course, big investment in the plan and the European Green Deal that put really solar one of the key pillars of the recovery plan. Next slide, please. And so, in conclusion, solar really is can really support not only our sector. Solar can be need to be put in a recovery plans with a long-term vision, with a principle of a build back better, and these solar can really improve environmental protection, public health, resilient communities, economy, and jobs. So solar is not solar business. Solar is really the heart of, anyway, a new scenario that involve all these very important pillars of recovery plans. The last slides is showing, next please, webinar that we are organizing with right on the concept of build back better with solar. Jeffrey Sachs, which has been the consultant of COP. We'll have the carbon price leadership coalition, very important because the carbon price and the emission trading could be a way of financing the green recovery plans. We have the pleasure to have also some outlook of what is happening in USA and what is happening in Spain, which is a key European market, with José Donoso, and also not only what is happening, but what these two countries are doing for a green recovery plan. That's all from my side.
Thank you, Gianni. Thank you, Gianni. And indeed, I can hear an echo. That was good. So thank you, Gianni, again. Indeed, build back better. Green recovery, do no harm, very important concepts and ideas in the current situation, I believe. And SolarPower Europe, as SolarPower Europe, we're also fully behind these ideas. SolarPower Europe has joined a number of alliances and coalitions arguing for a green recovery plan. And it seems, and this was also substantiated and confirmed by this morning's messages from the European Commission, that the European Union has listened to these calls, and there will be, at least there is currently the intention for a green recovery, a very ambitious green recovery. So let's be hopeful on this, and let's further explore these topics in the panel discussions. So it seems that in the meantime, Michael Renner from IRENA has joined us. If that is the case, and if Michael is ready to speak, then we would be happy to give you the word, Michael, because it's just the right time. It's your time to speak about IRENA's global renewables outlook and what we need to transform the energy sector by 2030 and 2050. So, Michael, over to you. It's good to have you here.
Thanks very much, Máté. Yes, indeed. I feel like a just-in-time delivery because I've been struggling for the last hour with Charlotte to make this work, and it's finally working just on time. So unfortunately, I didn't hear the other speakers present, but I don't think I'll be overlapping too much. Let me start by noting that we are about a week out from releasing our report on the COVID situation, how to deal with the short-term and the medium-term situation. And so the short-term being defined as the next 3 years, and medium-term to 2030, which is sort of within this framework that you mentioned, Máté, in terms of our looking at 2030 and 2050 longer term. You know, what does the energy transition imply? What does it hold? What do we need to do to make it happen and to accelerate the transition that we are on? So the presentation I'm going to give is really more drawn on this report that we released just in April, which seems an eternity ago now, the Global Renewables Outlook. And I will just draw a few points from that, because we strongly believe that part of what the challenge is now for policymakers and everybody else is to make sure that we sort of align the shorter term measures with the longer term, that we avoid getting off track with the energy transition, that we undertake the kinds of measures, policies, programs that we need to actually accelerate the transition that we all agree that we need so desperately. So if we can go to the first slide, please. Thank you. So this slide really just gives you, in a nutshell, what the different pathways that we're looking at imply for 2030 and 2050. We call the scenario that is more in line with what's in place now in terms of governmental plans and policies, the planned energy scenario, and the more ambitious one, the transforming energy scenario. So you can see that the more ambitious one reduces energy sector emissions by about 70% by 2050, which is much more so the case, much more steeply than under the planned energy scenario. Under the more ambitious one, renewable energy would actually provide some 28% of the global energy supply by 2030 and 65% by 2050. Now, this is in comparison with about 14% nowadays, so it's a very significant step up. Let's go to the next slide, please. And so looking more specifically at the power sector, the transforming energy scenario sets a pathway to more than double the share of renewables to 57% by 2030, with solar specifically contributing about 13%. So solar playing, of course, a very significant role. overall. Now, to achieve this kind of outcome, we think that it will require cumulative clean energy investments of about $49 trillion between now and 2030, or about $4.5 trillion per year on average. This is, again, for comparison with now, this is about a bit more than 5 times the amount that actually was invested in 2019 at $825 billion for all clean energy, right? Not renewables only, but for everything that's called clean energy. So there's energy efficiency in there as well. Within the renewable energy sector, the most money, the most investment would go to solar PV, with about $318 billion on average per year over this coming decade. Can we go to the next slide, please? Thank you. So the investments that we envision would yield very broad socioeconomic benefits, and we are looking typically in terms of GDP, we're looking at jobs growth, and we're looking at human welfare. And human welfare, I'm not going to talk about this now, but just to explain, we typically look at the health benefits that arise from reduced air pollution, which of course is a result of using far less in the way of fossil fuels and moving to renewables. So compared with the more business as usual scenario, the transforming energy scenario can, according to our modeling, yield a cumulative gain in GDP worldwide of about $14 trillion over that business as usual scenario. So really, giving an extra boost in terms of the economic activity. The overall number of jobs in the energy sector as a whole would reach close to 100 million in 2030. And jobs in renewables specifically would more than double from today to almost 30 million. For comparison, employment in energy efficiency, we think, would nearly triple to 29 million. And then we also look at grid and energy flexibility measures, because we see these as very important in context or in conjunction with renewables. And the jobs in those fields could actually double to about 12 million. So all in all, really a very significant growth in employment in various, as we call them, energy transition related areas. Let me focus specifically on the solar sector. We think that solar will create the most jobs in the renewable energy sector. From about 4 million jobs today, that number would reach almost 12 million under the ambitious scenario. So if you can go to the next slide, please. And I want to just very briefly talk about, it's one thing to talk about numbers of jobs, and they are of course important in a situation where the COVID crisis has made us all very aware of the vulnerability of jobs, the uncertainty swirling around the employment situation, both in the energy sector and the economy as a whole. So in addition to quantity of jobs, we do need to also look at what kinds of jobs are we really talking about. And so part of our work has looked at the different types of jobs along the value chain for selected renewable energy technologies. So what's required to produce, install, and operate solar and wind and other facilities. And we find, and you sort of see this a little summarized in this slide, that for a typical 50 megawatt solar PV plant, it will, along the value chain, require something like 230,000 person days of labor inputs. The biggest chunk is in operations and maintenance, which of course stretches out over a number of years. Then that's followed by manufacturing, which is about a quarter of the total, and construction and installation is a somewhat smaller segment. Relatively similar story in wind, just for comparison purposes, O&M being the largest chunk, with construction and installation next, and manufacturing a smaller aspect. And I think, but probably most people on this call realize this. Just let me say very briefly, I think what's really important to include in our messaging, I think, to the larger audience, is that renewable energy really provides employment perspectives for a very wide range of people with different skills, different occupational groups, different expertise, anything from the STEM fields to the non-STEM professionals. And of course, the largest number is really not for jobs that require a university degree, but rather in fields like factory work, manufacturing, construction work, and so on. So there really is a broad opportunity for a lot of different people to find a job in the renewable energy field. Now, let me just briefly move with the last slide to talk a little bit about the holistic policy approach that we usually talk about and that we find is really being reinforced by this COVID crisis. And so, excuse me, as the slide shows, we think in terms of sort of different policy areas that really go hand in hand with each other. One being the various kinds of deployment policies that we are all aware about, so including targets, mandates, feed-in tariffs, auctions, and so on. But also then assisted by measures to facilitate the integration of renewables, and particularly variable renewables, into the grid and into other energy systems. But then what we like to emphasize a lot, particularly with regard to ensuring that the socioeconomic benefits are maximized, is a set of what we call enabling policies to create the socioeconomic underpinnings for this needed transition. And so very briefly, I'm going to include a set of industrial policies to enhance and leverage domestic capabilities in different countries, to make sure that there are viable domestic supply chains. We need education and skills policies to ensure that we have a well-skilled workforce, that there aren't mismatches in terms of what the industry needs and what the education sector provides. We want to probably also think more and more about the reskilling, to the extent that's feasible, of workers in the fossil fuel industries, to see where there are overlaps in terms of skills and expertise needed with the renewable energy sector. That may be more so in the wind industry than in the solar one, I would imagine, but it's worth keeping in mind. We need a set of labor market policies, adequate employment services, perhaps facilitating labor mobility where that may be needed. And of course, we need to make sure that the necessary financial resources are being mobilized, not just mobilizing private sector investments, but I think also coming up with a much stronger direct public sector role in driving an investment strategy. And this will be part of what we're going to release in our COVID analysis report in about a week or so as well. And we feel particularly strongly that in addition to what could be seen as sort of more medium and longer term objectives, that we really need to take this crisis situation now as a reason and as an opportunity to say we need to front load needed investments far more. We need to really jumpstart the transition and jumpstart the economy, a good part of the economy in the process. We need to, as I just said, ensure that there is a strong public sector role in bringing this about. And I think also let me mention, because this often doesn't, gets sort of a little shunted by the side. We also need to make sure that, to the extent that workers in the energy sector, and including in the renewable energy sector, are affected by the current crisis, we need to have measures in place, typically social protection policies, to ensure that nobody falls through the cracks, because we need to marshal as much as possible the existing skills and expertise of people. We cannot afford that existing, economic relationships in industries fall apart and then having to rebuild them later on. So I think there's a real need to take care of that aspect as well. And I think I'll actually leave that as my final point. So thank you very much.
Thank you, Michael. And indeed, it is really good to have it black on white from a reputable organization such as IRENA, how important solar and renewables in general can be in terms of helping to rebuild, in terms of supporting the green recovery. And just a quote from you that I noted down: solar will create the most jobs. Indeed, this is in line with our findings as well. And we believe that solar and other renewables as well should be used to build back better, to take a concept from Gianni's previous presentation, which I hope to further explore in the panel discussion. But before that, and last but of course not least, let's move on to our next speaker, Alessandro Boschi, who's head of the Renewable Energy Division at the European Investment Bank, and who will tell us about the impacts of COVID-19 on solar projects from the bank's perspective, and also about the EIB's support to the solar sector. Alessandro, over to you.
Thank you, Máté, and good afternoon, everybody.
We can hear you. Yes.
Hello, can you hear?
Yes, now we can hear you.
Now we can hear. Okay, well, thank you, Máté. So thank you for inviting me at this webinar, and also thank you for the other speakers for the very good presentations. So as Máté outlined, I have a few slides. I mean, besides some introductory slides, I would run through a bit more quickly. The focus today is to tell you a little bit what has been the EIB experience on the solar projects that we're following at various stages of development. So both under development and under construction and in operation, because the situation was, of course, a bit different, and also what the immediate reaction has been, you know, on towards the crisis, and where we see the next steps ahead. So if we go to the first slide, I mean, this is just an introduction for those who are not familiar with the European Investment Bank. So we're a public bank. We're actually owned by the 27 now EU member states, and we are basically the EU bank, and everything we do is, if you like, driven by EU policy. And we have 4 key areas where we're focusing on, and climate and environment is one of them. We can go to the next slide. Well, this is a key slide for us since the end of last year, because and this is actually really timely from our side at the time when we had no clue actually that we would be facing this COVID crisis after a few months. So the board of the bank approved in November last year the increased ambition of the bank on climate. I mean, climate is not new for the bank. It's been the focus already for some years. But I think that we came to a turning point at the end of last year with this approval, based on which there are basically 3 key actions here that will follow one another in time. So the first one is fully aligning every activity the bank is doing to Paris. So even the parts that are not strictly, climate action projects, like it would be for renewables, we shouldn't be supporting any project which is going in the wrong direction. So everything we do has to be neutral, if not contributing to climate. Then the other thing is that before 2025, 50% of all we do will be for climate and environment, which is a step up to the current level of 30%. And then in terms of mobilizing investments, so the target is 1 trillion euros of investments mobilized. And in energy, we are a step ahead of the game, if you like, because at the end of last year, together with this climate bank approval, we approved also the new energy lending policy, where we clearly stated that the focus from now on for the bank will be renewable energy and energy efficiency and supporting infrastructure. So if we go to the next slide, just very quickly, so just to give you an idea of the amount of lending that the bank is providing to renewables and to solar. So it's already a few years that renewables and solar and energy efficiency have been at the core of our lending. So from this point of view, on track for this increased ambition. And you can see also the important role of solar over the last 3 years in particular, where we've lent around 1 billion euros of loans to projects in the solar PV sector. And you will see also some support to concentrate the solar power, but this has been essentially outside the EU. And the support of the bank to solar is, if you like, twofold. So we have utility scale solar PV projects, which are larger projects, typically project finance projects. And we are also lending to smaller projects, but this we do through intermediary banks and equity funds. So if we go to the next slides and go into maybe to the core of what I wanted to speak about today. So obviously we saw impacts of COVID on the projects we were following. And these impacts were of course twofold. I mean, on one side, there was an impact on ability of people and goods to move and to reach, let's say, from the manufacturing sites, the generation facilities, and for workers to move from their homes to the energy generation sites. And this, of course, slowed down and in some cases stopped completely for weeks the activities. The other big effect was on the electricity generation markets, because of course with the situation of COVID, the electricity demand went down, commodity prices went down, and this had then knock-on effects also on carbon prices. And so we had a situation where the electricity prices were really low, and this of course had impacts on the sector. However, the impacts were quite different across geographies and depending on the moment in time. So in the case of PV, of course, given that the majority of the modules were coming from China, I mean, there was a moment in February where the lockdown had really slowed down manufacturing of components, but this, at some point, the situation improved, and then the issue was more, getting then the modules from, the point where they were delivered in Europe to the facilities, which was in some cases slowed down. And of course, the impacts was different very much depending on the status of development of the projects. So projects that were already under operation, they were not really materially affected, of course, also because generation is an essential activity, and in most countries, all the power plants, including the solar plants, were allowed to operate. But then, of course, projects under construction, in some cases, these were slowed down, and we had in some cases, situations where the EPC contractor was claimed, for example, force majeure because it could not stick to the timeline of the project. But I would say that in most cases, this was resolved so far, as the situation has improved since February, March. And so I think that most of the projects we are following are actually with some delays and very limited cost increases to our experience, will be delivering on time, or the ones that were already under construction. Of course, project under development, I think in many cases, they were also slowed down, as typically projects that are facing electricity market exposure. For example, in Spain, we have finance, and we're looking at various projects that will sell part of the electricity on the market. And with the prices going down, of course, negotiations with the off-takers were slowed down because the visibility on the future trend of prices was not clear. So I think this could be one element explaining also delays in solar PV projects at some point in time. But of course, prices are going up again, and so the key thing is how fast we will go back to normal. And as stated by the others, I think it will be really an opportunity, to accelerate, if you like, the green recovery here. And I think one key factor is really the resilience of the sector compared to the other sectors of the economy. So, I mean, one important figure from the IEA review for Q1. So the electricity generation globally went down 6% during the first quarter. Generation from renewables increased 1%. So not only didn't decrease, it did not decrease, it had even a slight increase. CO2 emissions went down 8%, according to IEA, which is around 6 times the reduction that occurred during the 2008 financial crisis, just to give an idea. And the other sector, because if you think about the future green economy, I mean, it will be renewable energy, but it will also be the digital economy, which was also the other part of the economy which was, most resilient to the COVID. So this is really positive because it's showing that renewables are resilient and are the technology that one should support looking ahead. If we go to the next slide. So, I mean, when these situations happen, this is the natural role for the bank. Okay, we had a similar situation in 2008. And well, the bank underwent a capital increase in order to step up its lending. So we're a bit in this situation now. So this is where we need to show that we are there. And what we did immediately was approving an emergency response package, which was mainly towards existing clients. And it was mainly about anticipating, because of course it's been a liquidity crisis for many companies, also in the energy sector. So the emergency was response was looking at anticipating disbursements or increasing loan amounts, in order to give immediate liquidity where possible to projects. Of course, for project finance operation, this was more difficult, but there I think it was important, if you like, to signal the presence that we are there to support for the long term. Okay, and there were moments where commercial banks, we had cases were a bit more hesitant, and we were ready to to step up our role in case the commercial banks were beginning to pull back. And I mentioned a project with force majeure events. Well, there we showed, and we are showing where this happened, contractual flexibility. We had to waive contractual conditions, for example, to be able to continue supporting the projects. And maybe another element of interest. So we publish, they're available on our website. So guidance notes to promoters for environmental and social aspects. So these are basically have two objectives. I mean, one is, if you like, to remind promoters of the EIB's environmental and social standards. And I think the other is basically providing advice, if you like, to prevent the spread of the infection and address socioeconomic consequences of the outbreak, and also take actions to become more resilient in case, the crisis protracts for longer. And the next slide. So in terms of what next? So as I mentioned at the beginning, so the Climate Bank, we have a roadmap to implement it. And actually this is undergoing a stakeholder consultation. So you can also go to our website and see we have a number of public events where we're presenting what we're going to be doing. This is mainly relating to the other sectors at the moment, not energy, because energy, as I said, was already defined at the end of last year. The other thing we're doing, we're intensifying our dialogue with the member states on the national energy and climate plans. So it is important that the member states, they stick as much as possible to their plans. And I think it's important that we show that the EIB is there to support them. This was actually one of the key actions from an energy lending policy, and it is more important than ever at this stage. Well, the next important aspect is cooperating with the Commission on the revised MFF and the Next Generation EU. I mean, as you know, this needs to be still approved by the Council, but it is potentially a very powerful instrument to increase lending towards green. And under that, there are a number of initiatives where the EIB has a key role. So there is, for example, there is a financial instrument which is the continuation of the EFSI, which is called InvestEU. And under that, there is a window which is a sustainable infrastructure window, and EIB will be delivering 75% of that instrument. And under that instrument, the target is to have 60% of the investments for climate. So obviously, and this has been doubled. So it was already planned under the previous MFF. Through the Next Generation EU, that instrument is going to be doubled. So I think there is really the potential to increase, if you like, support to green investments and to solar. And of course, I mean, I think the other key important thing for us is to be more than ever close, to our clients and our promoters, and discuss individually with them the specific needs they have. Which is not only financial assistance, we can also provide technical assistance for promoters who need, for example, support in developing the project. And this we do with a number of instruments. We have Elena, you might be familiar with, which is for energy efficiency, but also for renewables in buildings. And under the InvestEU, there will be an envelope which is called the Advisory Hub envelope, which is it has a size of 750 million euros over the 7 years of the MFF to support investments which are aligned to InvestEU, and a part of that will be, of course, renewable energy and solar. I think I'm at the end, so thank you very much for listening, and of course I'm available for questions.
Thank you, Alessandro. Great overview of the ways COVID-19 has been impacting solar projects, and also very good to have an understanding of what the EIB has been doing and what we can expect from the EIB. Indeed, we expect a lot from you to support the green recovery in general, but also our sector specifically. So with this, thank you again to all our speakers for their input presentations, and I would like to open the panel discussion. And so let's start with the first question. I would also like to invite all speakers to enable their webcams so we can see you and look you in the eyes. And I would also like to encourage the participants to ask questions in the chat. But let's first have a look at the data that SolarPower Europe just published, and so we have significantly decreased our market forecast for solar PV additions for 2020. Obviously, this has been repeated over and over during the day. We've decreased our forecast for 2020 for global additions by 32 gigawatts, from 144 to 112 gigawatts. And so with this, 2020 might be the first year in history that the solar market shrinks. And so yeah, I would like to know what your opinion about this. How realistic are these forecasts? Obviously, there are multiple aspects of this to be addressed. How realistic were the original forecasts? How realistic are the forecasts in terms of the size of the shrinkage? And what do you think will the size of the drop depend on ultimately? I'm turning to Markus maybe as first. Would you like to share your thoughts on this?
Yeah, sure, Máté. Thanks for the question. I think the original forecast was a little bit too high. So when we look at our forecasting out of our methodology, I think we will see a market. Nobody knows for sure. Definitely, it's very tricky this year, but in the range of 108 to 112 gigs globally newly installed PV capacity. Our forecast was 118. So yeah, there is a rollback of around 10 gigs. But nevertheless, we will see if the markets are really shrinking for the first time. I think last year's numbers had been around 115 gigawatts, and yeah, so hopefully we keep the same level, but yeah, differently to other media and maybe also your numbers, our rollback wasn't that high because our original number wasn't that high.
Thanks, Markus. I'm turning to Michael. What is your take on this? What is Irina's position on the size of the drop that we can expect, and what do you think will it depend on ultimately?
We haven't actually done the kind of prediction or the kind of forecast that others have undertaken, so it's a little hard to say in that sense. I mean, I think, certainly as your question implies, there have been a number of forecasts that are relatively similar, right? So there is certainly not as much growth going to happen as was initially expected, because 2020 was shaping up to be a really great year. And now it looks, well, maybe it's going to be a less great year, but still not a bad year. And I would think, by and large, the thinking at IRENA among colleagues who look more, I don't look very closely at this myself, to be honest with you, but the colleagues who do in our Bonn office, for example, I think they would tend to agree with what Markus has just said. Now, let me maybe just add one thought. I mean, the one big unknown is maybe not so much, say, in terms of, so how do the industries, how do the energy markets deal with this, which is a big question, of course, right? I mean, to what extent have we sort of gotten a sense of how do we best handle the situation? But I think we also need to really still see a little bit, so how is this going to play out on the pandemic side, right? I mean, I think there is some worrisome consideration, well, we might have a second wave, right? I mean, we don't know what happens. And I think if it goes badly, that may really sort of upset the apple cart entirely. I mean, that may really make us go back really and rethink this entirely. I mean, I hope certainly, I mean, when we say this is obvious, but I hope that's not the case for various reasons. But I think we have to really still wait and see a little bit what plays out in the probably late summer to early fall period, I would think.
Indeed, I fully agree, and I think it's a very important point to raise, the possibility of a second wave. And actually, we mentioned this as a possibility in our global market outlook when we were discussing what would be a factor leading to our low scenario. I don't know the exact number, but it's significantly lower than what we're projecting in the medium scenario. It must be around 70-80 gigawatts for 2020. So, But let me follow up on the first question, turning to Alessandro. If I had asked you 2 or 3 months ago on the size of the impact of COVID-19, but now without talking about gigawatts, would you have been more optimistic or more pessimistic than today?
Well, it's a good question. It's hard to say. I think there's been going up and down of pessimism and optimism in all of us during these months, and I think it was a little bit for the sector. Well, I must say that compared to situation in February, where it seemed really very dark for not just for solar, I think for society and for the economies, I think we seem to be now, at least in Europe, I think in a better situation where we're legitimately more optimistic. I mean, as Michael was saying, I mean, we're all keeping our eyes on figures to see if the infection rates are increasing or not, and whether we'll have this second wave. I think if we do have a second wave, and we all hope not, I think we'll all be better prepared to face it. I think it's remarkable how all of us and the solar sector have been able, to react and without being at all prepared, because nobody was. This came, very fast, and nobody was prepared. If it comes again, we hope not. I think we'll all be better prepared. And I think from this point of view, my real hope is that if there's a second wave, I mean, the impact will be lower, and that will be. Because we all learned how to continue our business during this period, and solar and renewables, we need to keep the focus that they're at the center of whatever it takes, if you like. So whatever happens, we should not lose focus on the green transition, and it's not just about keeping the existing plants running. This is what we did, let's say, in the first wave. I think if we get a second wave, we need to keep the momentum on the new projects as well, because these are also essential activities.
Thanks, Alessandro. You mentioned it now, and you also mentioned it in your presentation, that the solar sector is particularly resilient as compared to other sectors. What is it, in your opinion, that makes solar more resilient in such a situation?
Well, I think, for renewables in general, they have zero marginal costs. So, and the result of that, or very close to zero. So what happened is when demand went down, renewables, wind turbines kept spinning, and PV modules kept producing at the same rate. And so that's an incredible strength that is part of the resilience. I think solar has an additional added value because in many places it is actually the lowest, the technology with the lowest possible LCOE. Right? Of course, and even in Europe, I would say, I can tell you that we're seeing projects in Spain, with the lowest LCOEs we've really ever seen. And so this means that in an environment where prices will also go down because of another macroeconomic shock, or because inevitably the penetration of renewables would bring prices down, I think solar is the best place to be resilient in that situation as well.
Thank you. I see Markus is particularly nodding, so I assume that you have something to add. What is your take on this, Markus? And if we could also continue this train of thought by speaking about how to further increase the resilience of solar. Obviously, keeping in mind that we don't want to increase costs exponentially.
Yeah, I fully
We can
feel what Alessandro is mentioning. I mean, mankind sometimes is doing stupid things, but I think there is a strong alignment of economics here. If you analyze in all these markets, LCOE-wise, the competing renewable technologies, you will find out that solar is by far the cheapest. And in other areas like the spotting in wind, high cost wind offshore, and other competing technologies, if you compare like capex opex wise, as of today, it is the cheapest. And I think a lot of even old industry players are getting used to that. They're getting involved, and that's why it is heading in the right direction. And that's why we are measuring within our business climate index exactly the resilience Alessandro is mentioning. And that's why there will be a good preparation for the second wave, if there will be one. I think there is a lot of lessons learned. We must not forget that most of the companies in the solar sectors are way quicker moving than the big ships in old industries. So I'm basically very optimistic here.
Thanks. So speaking about resilience, of course, solar has a different level of resilience to different aspects, different challenges generated by COVID-19, including issues on the supply side, issues on the demand side, disruption in businesses' operations, financing, etc. Many of these aspects have been highlighted earlier today in some of your presentations. So what do you, turning to Michael and Gianni perhaps, what do you think is the single biggest challenge faced by solar projects, challenge triggered or linked to COVID-19?
Well, I'm not sure if it's the biggest challenge, but I think a challenge that's worth looking at. I mean, it's worth looking at the distinction between utility scale projects and rooftop solar installations, right? Because I think in big projects, you can more readily have the social or physical distancing that's required while the virus is, raging or not fully under control. Whereas in rooftop installations, I think that's physically just often very difficult. That's one thing. The other thing is, I think we have to look at what happens in terms of, household incomes, to what extent, do the impacts of the crisis so far translate into, at some point, job loss, right, which Europe has better managed to avoid than the US, for example. But that may change, right, depending again on whether there's a second wave, on what happens, how people react, how businesses react. And to the extent that there is more of a, how should I say, that people are more reluctant to spend money because they're uncertain about their own future, that may really crimp the prospects for at least that segment of the solar market, I would think. I mean, that's I think, again, I don't want to call it the biggest challenge, but I think it is a challenge that needs to be looked at closely and maybe to try to understand what can actually be done about it. I mean, I think to the extent that people feel unsafe, that's very difficult, right? I mean, you can deal with other factors like, like cost or certain other issues, but uncertainty in terms of your own health and safety is something as a government, or as a business, you're not easily going to convince people to act differently than they think they should in order to safeguard their own lives.
Yes,
Yeah,
I
absolutely.
may join Máté. Anyway, the main challenge for the sector in this moment is take the best of this opportunity, because really the main challenge is really to take this, which is a great opportunity that, let's say, as was said before, solar has demonstrated to be. Anyway, we have now more easily linked solar with a lot of important concepts of like health, like resilient communities, and so this is what the government will do in this moment, will determine anyway our future acceleration, and we need to be fast in this moment. Try to let the government understand what is the value of solar, value of renewables, and really try to provide input for the recovery plan. So governments and governmental institutions need to involve industry associations in order to provide anyway concrete really concrete anyway elements for the recovery plan. And also when we talk about carbon price has been always in the scene from many years now, and anyway this could be a very good opportunity maybe to make it happen, because this could be a very good source of finance for the growth of the green sector, and finally could let solar renewables to play in a levelized field compared to fossil. Nowadays, I see some comments may are not addressed to Global Solar Council, maybe to AB, but is really nowadays incentivize fossil fuel is really a nonsense. So we need to put the light on this. We need to put the light that investing in solar energy means more jobs, much more than fossil fuel. And this is my message.
Thanks, Gianni. And Gianni, so as the Global Solar Council, what are your most important asks to governments around the world to accelerate the recovery? And also, could you provide us with some examples of how governments, perhaps from Italy, where you come from, are already addressing some of the challenges posed by COVID-19?
Yes, as I was saying, it's very important recommendation that governments really build recovery plans on concrete elements and try to engage anyway real associations like us, etc., in order to provide real elements, because this is the best moment to act. And of course, in all the recovery plans, not only EU, etc., in all countries, anyway, digitalization and sustainability has been and are the key drivers. So this is a very good moment, but as said, we need to provide concrete element to make real plans and to make support the monitoring of these plans. Yes, there are one important point is to share best practice in terms of policy, because a lot of governments are trying to start, as I was saying in my presentation, new schemes for promoting accelerate solar and renewables in general. Also in Italy, as you mentioned, we have the eco-bonus, this tax incentive that might really accelerate all the solar rooftop projects. It could be a very important opportunities. When somebody was talking before about, of course, there is a uncertainty in the short term. Maybe we are more optimistic, but I think this semester of 20 and 21 is a joint period where anyway there could be a rebound, as what you mentioned before, and anyway what is going to happen maybe in the second semester or in 2021 will really rebalance and could in a conclusion bring to a very important results. So exchanging best practice and trying to collect, as Global Solar Council will be doing in the next, and best practice on important and efficient or policy schemes is very, very important. And of course, you mentioned before what the industry should do in such a moment. Now we have understood that we need to be joined to understand the possible scenarios. This is important. Anyway, continue update on the possible scenarios that can happen is the best we can do, and in order to address for governments and for industries. That's why, anyway, the webinars we are organizing, the one last on the 23rd of April, where SolarPower Europe was also one of the speakers, and the next one with visionary, anyway, economists like Mr. Sachs, anyway, people, exponent like the representative of this leader, will be very important to really address our strategies and understand the scenarios.
Thank you very much, Gianni. So keeping an eye on the time, I would propose to start picking up some questions from the chat. And actually, one of the questions that I would like to propose to Alessandro from the European Investment Bank is related to some of the concepts that we discussed earlier today, including Build Back Better, that was mentioned by Gianni, and also the do no harm aspect of the EU Green Recovery Package. The question is, could you confirm that the EIB is not going to bail out fossil fuel companies or provide investment funds or finances as of now that would jeopardize the Paris Agreement?
Well, as I mentioned very clearly at the beginning, I mean, we're going completely in a different direction. So we're going to be aligning all our activities to climate towards until the end of the year. And this will not just be for energy projects. It will be for all the sectors, including industry, agriculture, and mobility, just to mention some examples. On fossil fuel, I mean, we are phasing out completely our lending to fossil fuel projects. So this is already happening. So we are maintaining still this year for project of common interest, so gas interconnections, but we already committed under the new energy lending policy that we will not support fossil fuel projects any longer. We will have an emission performance standard for those who are aware of our previous, it was already in our previous policy, of 250 grams for CO2 per kilowatt hour, which is basically, we'll be able to support only high efficiency natural gas CHPs that meet that standard. And it will be also very ambitious that this is reached. But of course, our intention is to support green gases like hydrogen. And this is, we're actually beginning to see a few projects in that space. And maybe I take the opportunity, to say that in terms of building the longer term resilience for solar, I think it's really key that all the other sectors move on towards decarbonization, because I mean, their move towards decarbonization means electrifying, and their electricity needs will have to be then provided by renewables, and solar will have a key role in doing that. So it is, if you like, a win-win situation for the solar sector, to have all the other sectors electrifying. And according to the scenarios, despite the energy efficiencies that will be realized and which will be key for the decarbonization, so electricity demand, if other sectors are electrified, is going to increase at some point. It's going to be stable more or less until 2030, and then grow. And this is really important that the solar industry is ready for when that happens. And in a way, you could say, so when this coronavirus hit, I mentioned that renewables maintained their production. I think, based on the information, there was hardly any curtailment of renewables, But, if we are in a situation in a few years' time, nobody wishes that this happens again, where renewables will have a higher share of the electricity generation. If the other sectors don't electrify and the demand doesn't grow, we may face a situation where, if energy demand goes down again for some reason, we need to curtail generation from renewables instead of using it, to produce green hydrogen and store batteries in electric vehicles. So I think that's also a more longer-term challenge that it is really important for the decarbonization and for the solar sector.
Thank you, Alessandro. And perhaps we have time for one final question from the audience, which is also addressed to you, Alessandro, but I think the other participants, the other speakers, may be interested in providing an answer to this question as well. How can investors and financing institutions price in force majeure events like COVID-19 lockdowns and the breakdown of industrial consumption that would negatively affect the bottom line of solar power operations or energy traders? Alessandro, do you have any insights, and also the other participants?
Well, I mean, that's a difficult question. Of course, who would have priced this kind of risk until a few months ago? I think probably nobody. Of course, as all banks do, we do price in the risks, of during construction and during operation. So in some way, we'll need to take that into account in our pricing. But I think, of course, our objective, as as a public bank, is not to we are basically we don't charge up interest rates beyond our costs. Okay, so we price the risk, but we don't. We are no profit bank. So I mean, the intention is of course not to price that risk. That would be not the objective. I mean, the objective would be, to still be able to support the sector, in that context with higher risk. So I think if you like, the question is wrongly placed, meaning that our focus would certainly be to be counter-cyclical and be able to support the sector, even when commercial banks are pricing that risk, I would say.
Thank you. Any other opinions on this particular question before we move ahead to a concluding round of questions? If not, then I would like to propose the following question to all the speakers, and I would like to ask all of you to respond briefly in 30 seconds. What do you think is the biggest opportunity linked to the current COVID-19 crisis? How do you think COVID-19 will or may transform the solar sector in a positive way in the future, in the mid or the long term? I see Markus nodding, so I take this as a raised hand. Markus, would you like a brief answer to this question?
I think there are quite a few positive takeaways for mankind when we look at the digital processes. I mean, we are conducting the online conference right now. Industry stakeholders are learning to target customers digitally. The more solar diffusion processes speed it up into the markets. That's correlating with more awareness. So definitely the companies have to further adapt by means of digitalization. But another impact is for sure the ongoing system, as well as panel, as well as component, and any other component pricing, which is rolling back, increasing in each of those country markets in the future quarters and years. The spread in between the segments, electricity tariffs and generation costs, which is really favorable. And there are other learnings. Look at the logistics companies. Hellman, for example, was introducing great smart supply chain and logistic processes, helping to allocate the product better. I mean, smart allocation means, from the perspective of the EPC, as well as the end customer, as well as the manufacturer, really cost saving and maximize your margin. And there are more and more solar markets within the next decade. So that's an optimistic outlook.
Thank you, Markus. Michael, what is your take on this? What's the biggest opportunity linked to COVID-19?
Well, I think I'll go out on a bit of a limb of sorts, and I think what I would point to is, what people have experienced unexpectedly because of the COVID crisis, right? The lockdown, the reduced traffic, is how clean air can be, particularly in cities. And I think this will reinforce sort of the positive aspect of not just solar energy alone, of course, but all renewables, that we can generate energy in ways that are not, disadvantageous to our health. I think there'll be much greater support for solar and other renewables as a result, is what would be my expectation, my prediction.
Thank you, Michael. Gianni, over to you.
Yes. Thank you, Máté. Yes, I connect to what Michael was. These are great momentum to talk with people because about renewables, about solar, as I was saying before. Anyway, people has understood how renewables can be linked with health, with better social condition, with the communities. So this is a momentum of talking only among us, industry. So we need to start possible cooperation in order to really talk with people, and that will, of course, determine who will lead the future governments. And so yes, we need to go out from and talk with the mass.
Maybe on my side, if I may, as usual, when we're hit in difficult times, let's say, it is when the opportunities come. So, and I think solar needs to take that opportunity now. And I think there are two things I would like to mention. So, on one side, we mentioned about resilience, but the fact that solar is resilient, we should not be resting on our laurels and saying, well, we're resilient, we don't need to do anything. No, we need to learn. I think the solar sector needs to learn on how to do things even better, and be able to cope with a similar situation if it were to turn out again. So I think this is something that the private sector, let's say, would be able to do. On the public sector side, I think it is key now to redirect, all the resources. And of course, the Commission and the EIB, I think, are clearly going in that direction towards green. So we should not be, nostalgic of the past. This is really the opportunity to speed up on where we left things and abandon. Maybe it's the opportunity to abandon, I think, some of the things that were not working so well, and I worked even less well during these difficult times. So I think there's a challenge and an opportunity for both the private sector and the public sector to to step in and improve, their actions towards green investments.
Thank you, Alessandro. And I think with this, we couldn't have had better concluding words for this session and for this panel discussion. And on the SolarPower Europe side, we, of course, fully agree with your analysis on this. And we look forward to, of course, to collaborating between the private sector and the public sector with all your organizations. And with this, our time is